Hey everyone, thank you so much for joining the Behind Company Lines podcast. Today we have Jim O'Brien, CEO and co-founder of Agrograph, which delivers global solutions for the crop insurance, ag financing, grain distribution, and ag tech industry. Jim, I'm so excited to have you on the show, not only to learn from your background and your experience, being that you've been a part of multiple startups. I'm sure you have a wealth of knowledge and not only how products work, finding product market fit, kind of realizing your TAM and also growing kind of your industry. But before we get into all that good stuff about your background and your experience, what were you doing before you started Agrograph?
Oh, Julian, I'm really excited to be on here. You've done a great job building this podcast out, and we're really excited to join a whole group of the Behind Company Lines family and share our story with your viewers. So
Thank you.
you're welcome. So a little bit about what we're doing before. I've done lots of different things. I think I like to think about, if you've ever heard of this book called Range by David Epstein. He wrote he's written a number of sports books, but he wrote a book, Range. It's on the shelf somewhere back here, about be really varied in your career first and then specialize later.
Yeah. Yeah.
So I was in academia for 4 years at Ohio State University, and I consulted for a number of years with my own consulting company. And I worked at 4 different startups and grew up in New York, that came out to the Midwest. So worked on a dairy farm, just had lots of different varied experiences. I worked at the Weather Channel. I wasn't an on-air meteorologist, more on the back end. So kind of had a varied career of lots of different industries. And I think all helped lead me to what I'm doing now.
And what was the initial, I guess, whether it was a catalyst or inspiration behind Agrograph? What did you see in agriculture? And I think people are becoming really aware of agriculture now that we're thinking about food supplies, we're thinking about population density and scarcity, and we're thinking about all the different ways that we even collaborate in getting our food supply. But tell me a little bit more about what inspired you to start Agrograph, and what was the catalyst to jumping in and being a founder of this company?
Well, like I said, I grew up in New York, and where I'm from, food came from the grocery store, right? So I've always been kind of on the outside of ag, looking in, and I think that's helped for me to bring a different perspective. And it also drove me to come out to the Midwest to find out, like, well, how's all this stuff work? Why do we grow all this corn? Like, what do we do with all this stuff?
Yeah.
So I've always been curious that way, because it's so unlike what I grew up with. And the one way I started was from my high school, where I was going to Villanova and Columbia and Harvard and all this stuff. And I went to Iowa State, and people were like, why are you going there? I'm like, what's the Harvard of ag? I'm like,
Yeah.
I'm going to go out where people do this stuff every day. And so I stayed in the industry for a number of years, and then about 20 years, and then left and from academic and then research and what have you. And it always kind of stuck in my mind that how can I get back in ag, knowing that I can never be a farmer. How can I contribute? And as I was doing work in consulting with a major property and casualty insurance industry, one of the top 10 in the country, I built out their risk platform, and it really opened my eyes up to risk management. You know what? I think this same need exists in ag, but I need to find a partner to go pursue it, because I can't do it by myself.
Yeah. And how did you find that partner? A lot of people think about or talk about their co-founder experience, and also finding the right person is tough, because it's a relationship. You really have to figure out not only what are the others' deficits are, but what are they good at, and trying to collaborate. How did you go about finding that co-founder, and how did you set the expectations for each other to be able to work and collaborate and then be productive in the right direction?
Well, I did it the best way possible. I met him at our kid's birthday party.
Yeah.
So I had no idea who he was. We were just sitting there talking, watching our kids play. And I said, you do what? Really? I was like, we should talk. So we kind of started this journey of meeting for lunch for probably half a year, just kind of talking through what he does and what his background. What excited me the most was, I said, if you can take what you know about yield forecasting, remote sensing, satellite imagery, and we could look at every field, every crop, everywhere on Earth, I can tell you with 100% certainty, working in the ag industry all over the world, because I worked in the wine industry as consulting, and one of the startups I was at, is that this is there's a deficit. They always say the U.S. is data rich, the rest of the world, in many degrees, is data poor that way. Yeah. And a lot of it is just, we've invested a lot of time and effort. So what he brought to the table is just great, deep expertise in data science and knowledge that that really was not something that I brought to the table. I brought the business skills, the globalization, how to kind of build a product up and a company. But he brought that expertise, and we worked well together because we really complement each other in ways that I think that's really important. And we talked a lot, being that we're older founders, in our 40s, that we're not going to sleep on cots and eat crackers all day. Like, if we're going to do it, we're going to be damn serious about it and do it right. And we're going to go at it with a really clear plan. And I think we talked about, like, when things go well, if things don't go well. And so we asked the hard questions up front. And I think that's really important. And it's really helped our relationship.
Yeah. And you're thinking about Agrograph and where agriculture is now, like I mentioned before, it's becoming more and more prevalent that even the average citizen should pay attention to the things they consume, where it's coming from, and really kind of support and think thoughtfully about what this industry is in its creation. And I'm curious, where is agriculture now? Is it farmers? Is it corporation? Who are the players that you're working with? Who are the stakeholders, and where are the deficits that they're missing in terms of the solution that they don't have, or do they not have access to it, or is it something more? Is it, you said a lot of the industry outside of the U.S. is data poor. What does that data help agriculture in particular do?
Yeah, where we started with and what we're focused on, and really from the beginning, was servicing. I like to say, let me step back for a minute, Julian. The number of farmers is decreasing, and it's the world over, but the farm size is increasing. Yeah. And most of the first world countries see this at a much more accelerated pace, right? So there's less farmers out there, but they're doing more, and they're more productive. And North America has some of the most productive farmers in the whole world. Actually, it's not just American bravado there. It's a fact of data. Brazil's quickly catching up with a lot of the productivity and seed technology. So that's kind of the state of the ag industry. So what we're focused on as a company is the industries that supports farmers. So if you use that same metaphor and say number of farmers decreasing, farm size is increasing, what isn't changing is those farmers' reliance on banking and insurance, right? As you grow, you need to cost of capital, you need insurance if things go bump in the night. And those industries are least equipped to go handle that new influx of clients. And most important, the way they assess risk. And that's really what we focus on, because we have this Agrograph or Agros risk score. Think of it like a FICO score for not for the farmer, but the FICO score of the farm, right? Now, we don't call it FICO score. That's Fair Isaacs, but just from a conceptual standpoint. And really better match price to risk, because at the end of the day, for those industries, they want to write loans to farmers, or they want to provide a policy to a grower, but they also want to do it with a clear understanding of risk. There's a saying in the investment world that uncertainty cannot be measured, but risk can be priced. So if you can understand that risk, you can price it. And that's really what we provide, is that data set to allow them to better match price to risk. The banks win and the farmers win. So
yeah. And describe the technology a little bit in regards to how the mechanics work. How do you evaluate risk? How do you kind of overall conceptualize a quote unquote credit score, I think it was called Ag Credit on your website. How do you not only collect the data, how do you translate and communicate an overall to score? And how was it done before? How were farmers essentially defining the risk of their crops or of their farm and going out and trying to get financing for them?
Yeah, so I'll unpack that question, and starting with the technology side. It's pretty easy to wrap your head around. We use satellite imagery, and we work with all types of satellite providers, whether government-backed or privately owned. We've done some work with aerial imagery or drone imagery, but we're really image agnostic. What we do use is this data, this remote sensing data or satellite data. It's constantly observing the Earth. If you think about it, sometimes at a daily cadence, sometimes at a weekly cadence. So every day the Earth is being observed, and we translate those observations of Earth into meaningful data, right? And I call it agriculturally relevant information, and downscale that to the field level. And then we use machine learning algorithms to again, run that processing. And we combine that with data that you could get publicly, like with soil data or rainfall data. You get the Weather Channel. I was a former Weather Channel guy. Like, you can take Weather Channel data, and you can combine this together to create a score, like an index. Though we call this Agros risk score. Again, think like a FICO score. FICO scores is what's the likelihood of you defaulting on a payment, right? Like how many credit cards do you have? What's your line of credit? How often you pay it back, right?
Yeah.
So this machine learning can be boiled down to multiple linear regression.
Yeah.
Y-axis is a dependent variable. I always say, what's the price of the car, right? And the x-axis, so what are the independent variables that drive that price? How many miles? What color? What seat choice? What's the brand? Where is it sold?
Yeah.
And same thing, but our y-axis is, well, what's the yield? What's the risk score, right? And what are the factors that drive that yield, right? If I'm growing corn in Iowa versus corn in Arizona, or I'm growing canola in Kazakhstan, there's different factors that drive the yield and the productivity in those fields. And what our machine learning is decide which ones weigh most heavily that drive that automated prediction.
Yeah. And what would have been how were farmers doing this analysis prior to technology like Agrograph, and also describe essentially the experience that farmers have, being that I'm assuming not unlike other businesses, we can see kind of the transactions and we can kind of project them and predict them, that we might have a sales cycle that goes through it, a predictive kind of measure. But I'm assuming for a lot of crops, it's seasonality. It's kind of longer, if you would say, yield cycles where there's a lot more uncertainty from when you start a crop to when you harvest it, to when you distribute it. How are they evaluating the risk prior, and how tricky is it to do so when something can be kind of unpredictably, I don't want to say mismanaged or mishandled, but there could be some external environmental kind of circumstance that say disrupts a crop for whatever farmer?
Yeah, I mean, you could call that an externality, right? Like a hail event or a weather event, right? Or some event or a flood, right? Something that's usually one of the culprits for a change in yield. That's why we observe the field. So to answer your question about the growers, I will in a second, but that uncertainty, we have something we call the Agros volatility index, right? To say, if you look at all the growers, let's say in a county, if we looked at Sonoma County, we want to say, let's look at all the wine grape growers up there. They're all going to produce the yield, right? As long as growing conditions were conducive. The question is, who has a higher bricks, so the higher total tons per acre of grapes? Well, there's going to be some variance. The question is the operators that tend to be most profitable year over year tend to have lower variation year after year, right?
Yeah.
Now they're all impacted by a dry year, and they're all negatively impacted by a wet year, and they're all negatively impacted by smoke taint, right?
Yeah.
But it's kind of like the more profitable growers have less variation in the final product than the growers that don't, right? So the question is, like, are you the 33rd or the 83rd best producer in your county? And that's the type of data that we provide. We provide that baseline. Again, I'll give the example of, think of it like Zillow for ag, right? They tell you every house in your neighborhood, whether it's for sale or not, put a price to it, not just showing you the 3 that MLS has up for sale, right? But we have the population, not just the sample. And so that's that little bit of how it's done. Back to the farmer side, again, kind of, if I kind of put the question back on you, like we're selling our data to the banks and the insurers primarily, and they're providing their services. Again, as a company, I'm not trying to become the bank or be the insurer. You have trust in there. You trust your doctor, you trust your insurer, you trust your banker. Continue doing that. But we want to provide data so the banker and the insurer, because we're not working with doctors, can provide us another company that can provide the best data back to evaluate the risks, to give that grower, who's the 83rd best producer in the county, the most favorable rate that represents the risk on there. And I like to say that banks don't ask and farmers don't tell. So there's a little bit of don't ask, don't tell in the industry. And what that does is create a little bit of a mismatch, because if you don't tell me all the information I need to know about your operation, and I don't ask all the information, well, I'll pad my interest rate or my policy premium based on what I assume is the risk you represent, whether you do or not. So right now, growers are a little bit of a disadvantage that way. There's a lot of conversations that go on about trust and privacy, which are true and important. But I'll caveat to say, both you and I will tell our bankers, insurance, and the medical industry everything they need to know because we trust them. And we believe that there's a clear exchange of value. If I tell you how I'm feeling and have you take a blood test, I know you're going to help me understand how I'm going to get better, right? So I'm willing to make that exchange, and for that, I'll pay you money, right?
Yeah.
No different in the ag industry. It's just right now we haven't created a clear mechanism of like, if you give me this, I'll give you that. Right now, it's kind of it's a very fragmented market and non-standardized, and what it leads to is inefficiency, pure plain market inefficiency.
Yeah, yeah. It's almost like they're speaking similar. It's like I speak Spanish, my family's from Mexico, but if I speak to somebody who speaks Portuguese, we can kind of get each other, but kind of don't. It's that a little bit of a disconnect, but it seems to go in a direction. But that's a little bit of a digression there. I'm curious in terms of ag as you mentioned before the show, it's becoming so popular. For some reason, it's becoming not for some reason, but we're even that much more aware of agriculture even nowadays. Why aren't more companies racing to go and replicate the process or go out and start working? Is it because it's a tight community? Is adoption of technology kind of slowly? Are we on the crux of that? Why aren't people flooding into ag, being that it's going to be so necessary and so abundantly clear that it's something that is not obviously not going to go away. It's only going to get the problems are going to get bigger. The need's going to get bigger. Why aren't people involved in agriculture?
Well, a little bit we talked on the kind of the pre-show work was you're more likely to run into a billionaire on the streets than you are a farmer, right? Just the percentage of farmers in the country is relatively small, and they're concentrated, like Central Valley, California, very concentrated, Midwest, very concentrated. And one farmer may run 20,000 acres. I think average farm size is 5,000 acres for a full-scale production farm. So one person and one group can produce quite a lot. So I think to your points that you brought up, and they're all good and relevant points, that I mean, ag is a very niche industry, and it's niche for a couple of reasons. One, not everyone has a direct relationship to it, right? I think many folks who've been in the industry have some connection. Either they grew up on a farm, or it's not like, my great grandfather's on a farm. Sometimes I've heard early stage people say that, like, well, great, but we all probably came from at some point if we go far enough back in history. That's not the point. I think, in my opinion, everyone has their opinion that to really get into an industry like this, you really have to understand the problem set and be willing to wrap your head around, why is it the way it is today? Why isn't it working? Like, you can't come in and say, well, I'm going to go disrupt it. We're going to change the way they do it. Like, that doesn't happen overnight, particularly in the banking and insurance industry. It's not sexy. Banking and insurance is not sexy, but there's an old saying that's like, why did Willie Sutton, he was a bank robber, why did you rob banks? And his answer was, because that's where the money's at. And it's like the same thing in this industry. Like, these are the power players that drive the money, and you really have to take the time to understand what they're doing and why they're doing it, and really like come up. For us, we've really focused on what's the solution to answer their question. How do I write and automate the onboarding, the underwriting, the risk process? How do I make it more standardized, more efficient? That's really the work we do, and you have to really understand quite a bit about the risk industry and quite a bit about the ag industry, and kind of put it all together. And I think that's what keeps a lot of folks out from playing in it, and probably for good reasons.
Yeah. And tell us a little bit more about Agrograph and the traction you've seen. How many companies, how many farmers, how many people are using the product? How many partnerships are you seeing now? What's been exciting about the previous growth, but what's particularly exciting about the next phase of Agrograph and what you're going to be focusing on this year and in the years to come?
Yeah, I would say, as the CEO and co-founder, what I've been most proud of is, as a company, we've really focused on generating revenue before we've generated venture dollars. As we haven't raised a lot of venture dollars. We've been profitable since 2019, and as a company, and it's been, in our investors, the investors that we do have been more of a slow capital, knowing that to grow a great business, it takes time, right? You don't go from 0 to 1 overnight, or 0 to $1 million overnight. It takes time to kind of build up. As like, back to my comment before, if you provide real value and real data to real people, they'll pay you real money for that. And if you can go build a business that way, you can scale and repeat that, knowing that if you're mindful about your scaling, of not like throwing an idea at the wall and like, that didn't work, and I spent a lot of time and effort, of like kind of incrementally growing to say, you'll hear VCs say, why don't you raise more venture dollars? And I'm like, look, man, if you throw a bunch of gas on a fire, what happens? It blows up mostly in your face, right? But if you do a slow burn and you're mindful about how you grow it, you can grow a massive Burning Man fire, right? Yeah. But you've worked your way up to that. You've like, I understand the product market fit. I built the product machine, and then you go build the sales machine, and then you start scaling that sales machine, and you start advertising. So we've taken, again, The danger in that is that if you're in a market that is providing a lot of value, other players want to come in. So there is a sense of urgency about growing, but we've just taken a very continual, hard path to grow quickly, but to grow mindfully. And I think that's the way I think about it. We don't just go make a rash decision. We're really clear of what we do, who we do it for, and why they need it.
Yeah. Yeah. And what are some of the biggest risks that Agrograph faces today?
Well, I think like any risk or any company that I would say is a small company, if you're under maybe 300 people, I'd say you're a small company. You've been in business less than 10 years, you're probably a small company. So I could include a lot of companies. Is you have risks of the economy, all the talk now and Silicon Valley Bank and that. I've got some strong opinions on that. Not that I don't need to be another talking head on that, but some of the things about risk management and chief risk officer and how you handle risk is an indication of like the type of dangers that can happen when you're not keeping an eye on that, right? And you take your eye off the goal and things unwind. Well, if you haven't done the other strategic financial portfolio risk things, when bad things happen, you're unprepared for that, right? You don't have the money in the bank to go with, have the wherewithal to stand it.
Yeah.
So for us, it's a little bit of the economy, right? And it's just, and then us for scaling, like getting more awareness out there of who we are and what we do. You know, we do quite a bit of our work, quite a third of our business outside the United States today. And a lot of it is getting awareness. How do I get our name out in front of companies in Argentina or in Central Europe or in Australia? Well, it takes time to build that brand presence and market presence. And one way we do that is partnering with some other companies. We'll soon announce some partnership with Planet Labs Imagery, so that we'll pull their imagery in for various projects and work with them. So that gives us a lot more exposure. And it's really a good symbiotic relationship between both organizations. They do image capture around the world, and we do the data analysis side. So it's a really good opportunity to work together. And they have a band of publicly traded companies, so a much bigger blowhorn to blow from than little old Agrograph that way.
Yeah. Yeah. If everything goes well, what's the long-term vision for Agrograph?
The long-term vision for Agrograph is really to become this credit score of ag. Just like if you're going to run, you're going to get a loan or you're going to buy a car or a tractor or a house, right? You've got to get a FICO score and a credit report, right? Every transaction. Well, the same thing in agriculture industry, whether you're buying inputs, which is fertilizer or seed, or you're buying a tractor or a combine or piece of land or getting an operating loan, they all have to run every year, every time, every grower has to get a credit report, has to get a FICO score.
Yeah.
And we want all those to go through Agrograph, and we run that credit report of the farm, because the reason that's needed is that farm, if you think about it, is what's creating the revenue that's driving the loan or the policy you're giving to the farm. It's the farmer, the individual. You can look at their tax records, but I'm not walking your 8,000 acres. In fact, I don't even know where 8,000 acres are located. So it's one of the there's a statement from a guy, Ken Zuckerberg from CoBank, who said back in 2017, and I was just on a panel with him out at the World Agritech Conference in San Francisco, was agriculture is the last $1 trillion global industry to truly embrace digital tools and technology to drive operational excellence. Like it's like, and there's nothing holding the industry back. Consumer and commercial divisions of banks have already put tens to hundreds of millions of dollars into digital engagement and mobile automation, standardization. It just hasn't trickled its way down into agriculture, but it's happening. And if it wasn't happening, we wouldn't have any traction. Though people wouldn't be doing. But it's this kind of flow churn of, as leaders come in that really value the data and the analysis that drives it, it changes the way you think about the business, and that's happening the world over. So it's a good time to be in the industry.
Of that. And I always like this next question. I call it my founder FAQ. So I'm going to hit you with some rapid fire questions, and then we'll see what we get. First question is, what's particularly hard about your jobs?
I think there's a statement from the Walter Isaacson book about Steve Jobs. I'm not a huge Steve Jobs fan, but I will say one thing he said there that's always stuck with me was that every day you may ride the shit hero roller coaster. Usually it was dealing with Steve Jobs, but that's part and parcel of running a company, is that you can ride that shit hero roller coaster sometimes the same hour, sometimes the same day, sometimes the same month, but the highs are high and the lows are low. And I think that's, again, as I tell my wife, she's like, "Isn't this what you signed up for?" I'm like, "Of course." But that part is probably the toughest part of knowing that you're constantly pitched and row between good and bad news.
Yeah.
So
Yeah. Definitely the roller coaster is a tough one. And what would you say, what's been helpful for you to kind of manage and stay neutral and kind of take in the information that you're getting with some lightness and some gracefulness, some things that won't impact you so much. Is there anything that you've seen valuable in your life, in your personal life, or even professional life that's helped you kind of manage the highs and lows? Advice for other founders who are maybe having a struggle and having a hard time managing their response to what they're seeing in their business.
I'll give you two responses, big picture. I mean, the first response is one that you can't just pull off the shelf. You have to be there. And that's experience. Like getting into this industry or getting into starting a company later gives you a lot of perspective. I think having a family, people might think like that maybe makes it more difficult. I would say quite the opposite. It really helps you to focus. Again, like what we talk a little bit in the pre-call of like, you focus on what matters and what doesn't much more clearly. And the stakes are much more real.
Yeah.
You're not just say sleeping on a cot and eating granola bars. Like it matters. So your focus is much different. So it's doing it later in life means you've had a lot more experiences and know how to professionally handle highs and lows. If you ever heard about Bill Gates when he started Microsoft, he'd walk the parking lot and see who wasn't there on the weekend. Like, oh, he must have been a joy to work.
Yeah.
Like, so like stuff like that helps. And then the second part is what everyone can do is at the end of the day, you all have to manage stress, but taking time out to say it's okay to take a break. It's okay to go for a walk, go for a run. Like we run a remote company. So everyone's remote. Like I don't micromanage. I can't micromanage, but like, I don't care if you're on a boat, you're at the ski lodge. Like as long as you're doing great work and producing results, that's fine. And it's also keeps, if you need a break, go take a break. Like, I'm not expecting you at the office sitting there 8 to 5, locked your desk. Like, but the results of your work will come through on what you produce. Again, so I think taking time for yourself is important. Again, you have to manage that. As you're running a company, you don't have a lot of time. So you have to realize that that's the one commodity I can't. I have to be careful giving out. But opportunities like this, sitting down with you is always enjoyable. It's a very good use of time for a lot of reasons. So you can control your time and you can manage your time. No one can take that from you but you. So I think that puts you in control a bit.
I love that. No, it's a great response. And I'm curious even more so, being that this isn't your first startup also, what have you seen and what have, in terms of, talk about experience and you talk about, and make me think of like maturity of the startup that you probably are building now. What have you seen or what have you learned now that you wish you learned earlier on about building companies, and what does a successful company need in terms of, if you looked at its components, you saw what it had in terms of operations and sales motion and product market fit. What are some things that a company needs to have to be able to scale, to be able to be successful, more so than anything else? Is there 2 or 3 things that you kind of prioritize earlier on, being that you wanted to do it right and you wanted to do it seriously, right? And take it seriously from the start. What does a company need to have?
Yeah, I mean, that's a tough one to distill to a quick talking point, but my off the hip response to that is going back to the comments I made earlier. It's important to find product market fit first. And we hired our marketing person before we hired our first salesperson. And the reason we did that was one of our board members said, Jim, you've got to load the lips of sales, right? Because if they're doing the job, they're going to knock on doors and say, hey, I've got this great product. You want to buy it? But if they're saying the wrong thing and they go out and kind of pollute the market with that, then you have to go back and correct that. So if you spend the time to be really mindful about what the hell are we selling, who needs it, why do they need it, at what price, what's the value, right, of what you're doing, and selling it for a price that like, hey, I'll give you a discount to get you in the door, but I'm not going to give it away, right? Because I was, especially in the B2B industry, why buy the cow if you get the milk for free, right? No one will do that. Like, I mowed your yard for free for years and then say, hey, Julian, by the way, I'm going to charge you $30. You're like, beat it. I'm going to find the other kid who'll do it for free again, right? And so it's a tough, you get yourself behind in a business in a way. And you read about I listen to a lot of podcasts, read lots of books like that. That's a hard one to overcome, right? So I think if you're always selling product that has value, that people will pay real money for, that's a good way to have you on that growth trajectory. So,
yeah. Another question is also thinking about ag and thinking about its evolution, especially currently. You talked about being at a conference recently, and outside of what you're doing in terms of risk assessment, giving kind of honestly a lot of power back to the farmer in regards to having its ownership of their risk in this identifier. What are some other things that you've seen in terms of that are pushing the industry forward and making it progress Is there any other technology, other individuals joining ag? What are you particularly excited about the industry overall?
So using this World Agritech Conference held in San Francisco, it's actually held, I think, 3 locations around the globe, in South America, I think Buenos Aires and in London. I think they're trying to do a Singapore one too. But again, no, not promoting a conference. It's a good conference for ag, but there's lots of good ag conferences. What makes this one different and why I would bring it up here is this conference is about discussing the challenges that the industry faces, and the ag industry in particular. But also, being in San Francisco, there's a heavy emphasis on innovation. And it's saying, hey, there's an old saying, right? If you're going to go point out my problems, be nice enough to tell me a solution. Well, this kind of puts that in play to say, hey, we've got all these companies that provide solutions to the problems we've talked about and the challenges of the industry. And let's marry them up together. Let's put them on a panel. Let's have, speed dating where they can go talk and present ideas. So, and of course, venture capital is there too. So I think that what I'm excited about is that there's money that comes into the industry. There's a venture side, which you need to get started. But the industry players have come in and been willing to talk about like what's not working, because that's half the battle of any new product to get the market. You have to understand, what are you solving for? What are you replacing? Why is it what you're replacing is better, cheaper, faster, stronger, Kanye West type thing?
Yeah.
Like if you can understand that, you're gonna get people nodding their heads and say, hey, I want to adopt that. I want to start chipping away at this problem.
Yeah.
I always say, like, you sell them the sexy ideas and they buy the boring stuff.
Yeah.
But that's how you have to get started, right? Get
Yeah.
the basic blocking and tackling, and then you kind of work your way iterative fashion all the way to like full integration.
Yeah. I know you mentioned a book earlier, but I always love to ask this question because I love what founders and how they extract knowledge out of anything that they ingest. But whether it's early in your career or now, what books or people have been super influential for you today?
I'm a big fan of books. Again, I've read every book on the shelf there, so a lot of people just stack them up. I probably have 3 that I would say from recently have been, let's say recently, but the last 15 years, the most influential for me, and they're all different. One, if I mentioned, was Range by David Epstein. And just because I liked it, because it reminded me of me, to say it's okay to have a really diverse background. You can still be successful. In fact, some of the most successful people are the ones who did lots of different things. And at one point said, Julian, when are you going to get your life together?
Yeah.
And you do it in the end, you're like, wow, because I did all these different things. I know a little bit about all these different industries. In fact, they're all pretty related. So the book's a fantastic story. I'd highly recommend it. Talk about like the Tiger Mom, like Tiger Woods and his evolution versus Roger Federer.
Yeah.
But by the way, Roger Federer didn't get serious to tennis. I think he was almost in college. So he loved soccer. He liked doing lots of other stuff. Tennis wasn't his main draw, even though his mom was a tennis coach. So fascinating stuff. The other 2 other books is, one's a kind of a golden oldie, but it's the How to Win Friends and Influence People by Dale Carnegie.
Yeah.
And I try and listen to that book every year, although I haven't listened to it this year. I usually do it on a book on tape or CD type thing, audible thing. But is that book so influenced me of like starting a company or like growing your relationships and growing your network.
Yeah.
It's so important to remember, like, hear about the givers and takers. Like if you want to provide value to people, we got 2 ears and 1 mouth. Listen first, talk once, and understand the importance of a good network of people, and providing value and listening. And that book is all about thinking differently and getting your head around, like, how do I sell better and sell a product better? Well, you got to understand people. Like, you got a background in psychology.
Yeah.
It's so important to understand that economics, one principle is that people markets are rational. And the answer is no, but people are not.
Yeah.
They're emotional. So understanding the emotion that goes into the sale, right? Facts tell, stories sell. Like, once you understand that, it changes the way. And the last book was a different book entirely, is Shoe Dog by Phil Knight. And that book, I mean, Phil Knight, my goodness gracious, what an interesting story of like all his like early struggles, and you're a failure, son, burning these shoes and like wasting your life. He had some funny like jackassery. What are you doing with jackassery? But he went and built Nike, and just his humbleness, which I like so much, so of like that he didn't take himself too seriously, but he worked his butt off, and he was persistent, and he didn't give up. And you're like, welcome to life. Like if it was easy, everyone would do it. The stock market goes up directionally, but it's choppy, right?
Right.
It's like, that's what life is like. That's what running a company is like. So I found that a very inspirational book. but also a book to say, always stay humble and know that if I get another chance at another day, I can be better than I was the day before if I learn the lessons of the mistakes I made.
Yeah, I love that one in particular because in regards to a lot of founders, and I've heard it on the show so many times, you have to just take away the ego from the company and really just focus on day to day the work and the output that you perform. Because outside of that, predicting things, it's all convoluted. You can only really kind of focus on the present and build and build and build. And it's that humble persistence that I think a lot of founders, in that book about range, I think a lot of founders can really attest to that. And one founder said, when building an early team, you need a bunch of generalists because everybody needs to be able to do at least one little bit of everything to move a company forward. And then after that, you specialize once you kind of go and scale. But I love the sentiment there because it kind of reiterated kind of the points that a lot of founders have made. And I know we're coming to the end of the show and it's been such a pleasure chatting with you, but I do want to ask this question. Is there any question I didn't ask? Anything that you would have liked to answer or that you didn't get a chance to answer? Go.
No, you've actually done a really good job. I think we've covered lots of topics here. I think one thing that we had talked about, and I think it goes to some of the perception in ag, is that it starts with the farmer. And I would say, no, it ends with the farmer. Like it starts higher up the food chain, right? It's a $1 trillion, I think it's something like a $27 trillion industry for ag, right? And there's a lot of different players in that market. The farmer is a critical component of that. But there's an old saying by John F. Kennedy that's like, the farmer is the only person who buys at retail, sells at wholesale, and pays freight both ways, right?
Yeah.
And it's like, it's a very important component, but there's a whole ecosystem that supports ag, from the distributors, suppliers, bankers, people who make the equipment that powers that. But most emphasis gets drawn on the farmer. And I think they're one of many inputs to this whole ecosystem that makes our life better and healthier and happier. I mean, if you look during the COVID time, one of the big concerns of the government was food security. Oh my God, if people aren't getting their frosted flakes in the morning, it's going to get nutty out there. And there was a real concern about that, of like, it's a supply chain, like, because when people don't have food, then it gets crazy. Look at the toilet paper thing. Imagine if that happened for frosted flakes, right? Yeah. So the grower is part of it, but there's a whole supply chain that's a part of it. And I think that's the emphasis of like, and we're plugging into the risk management side of the banks and insurance. And just to keep in mind that the farmer is just one part, but oftentimes that's the sexy part to talk about.
Yeah. I love that. And last little bit, where can we find you? Where can we find Agrograph? Where can we give our audience a chance to be able to support not only the product, but you as the founder? Give us your LinkedIn, your websites, your Twitters. Where can we be a supporter of you and what you're working on?
Love it. We're at agrograph.com on the interweb. You can find us on LinkedIn, Facebook, and Twitter, or not on Instagram. Not a lot of people in the banking world come to that side. info@agrograph.com. You could send us a note here. We'd love to hear from you and set up a conversation. Very grateful, Julian, for the opportunity to come on your show. You guys have done a great job, and to be able to contribute to this thought leadership, it's always a pleasure to do so.
Amazing, Jim. I hope you enjoyed yourself, and thank you so much for being on Behind Company Lines today.
Thank you.